All right, ladies and gentlemen, we are back with our pre-market pulse wave report with yours truly, the algo capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports. All right, so let's jump into these charts and see what happened on Friday. So, starting off with the Bitcoin futures, you can see here that the market ended still inside the Kumo cloud. So, the market's still consolidated here. And the long term trend is still bear market, but the intermediate trend is bullish. All right, we have a bullish trend momentum reading. All right, and we have a bullish bias in the market, and we have a rally alert for Sunday night into Monday. Top of the Kumo cloud back at that 30,000 mark is the initial upside target if the market is able to successfully break out of this Kumo cloud consolidation pattern. Next up is silver. So looking at silver, the long-term trend has turned into a bull market along with the intermediate trend. And we have a bullish trend momentum reading. However, the market is in the very wide Kumo cloud that ranges from 25 down to 23. So we have a $2 trading range in silver now. But the market is locked in. It's a locked in bull market on all time frames, long term, intermediate, and short term. All right. The long term trend is this down here, bullish. Intermediate trend is these blue bars. All right. Blue bars, bull market. Orange bars, like back here, is bear market. And then we also have the bullish trend momentum reading. All right. So in all three measurements, we are in a bull market in silver, which means I am expecting silver to explode well beyond the $27 mark. All right. So that's what we're watching here. So even though it's in the Kumo cloud and technically in a consolidated way, because we're locked in on all time frames on all three measurements, it's a bull market and it's still a buy, which means that this market is still a buy on pullbacks and dips. It's still going to be bid. It's just how it is. All right, next up is nat gas. Now, nat gas on the algo chart, long term bull market, intermediate term bear market. And now, as far as the momentum indicator, we were at a bearish trend momentum reading that is now gone neutral. So if we're going to be neutralized to start off Sunday night into Monday, we're in a neutralized position. So we'll wait till the market comes off neutralized and see what happens. The last time it came off neutralized, we got a sell signal and the market did fall down. So we'll see what happens on the next run. But I think the market does head lower before it heads back higher again. So we're still watching that gas. I think it's going to have its day, and we're watching it. Next up is the Dow. The Dow's long-term trend is bullish, and the the intermediate trend is also bullish now. Okay, and your short term though, your bearish trend momentum reading is bearish. All right, so long term, both long term and intermediate term trends are bullish, but the trend momentum reading is bearish. And that's not a good thing because what that means is the market's going to be range bound and continue that way until this line turns green. We need the trend momentum reading to turn. And a 1 day rally, no matter how powerful, does not a trend momentum make. So we need to see a continuation of this. It did manage to pop and close above the Kumo cloud. All right, putting it into the downtrend channel. Yes, it did that. We acknowledge that. But we've seen this movie before. All right, we've seen it before. This market's been consolidated since last year. All right. Moving sideways, go up a little bit, come down, just all over the place. And this is no different. The last indicator you had was this negative bot check, and we did get that downward leg there. Now we have a one-day rally that has put an end to the down move. But because this red line is still here, according to the algo charts, you're still in the sell the rally mode. That hasn't changed. You're still in sell the rally mode, like you were here, and 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 like you were here. All right. So nothing has changed in that respect. So we'll see how much upside potential this thing has. We'll see. All right. This is going to be a battle between the Bulls and the Bears. So we'll see what happens come Sunday night. Next up, we have the NASDAQ. Now, the NASDAQ is in a long-term bear market, and the intermediate term is bull market. We just hit a new 52-week high, and you have a bullish trend momentum reading. So, intermediate and short-term trends are bullish, even though the longer term is a bearish one. So what this means is this bear market rally has gone significant enough to actually change the complexion of the NASDAQ. So we had this bear market rally that started, and now we've crossed over into a bullish market officially, and the market is up and running and hitting new 52-week highs. So a very interesting turn of events. Will this continue and stretch on enough to change the long-term trend? We'll have to wait and see. But for now, the NASDAQ is bullish. Cannot deny that. Next up is gold. Now, gold is in a long-term bull market and an intermediate term bull market, but like the Dow, we got a bearish trend momentum reading that is making it hard for gold to punch through the $2,000 level. So we're watching to see what happens there, but it is fighting. It is fighting. The bull market can reclaim the price action at any time. All right, as far as the momentum is concerned, you already have the intermediate trend and long-term trend both bullish. When you have your intermediate trend the same as your long-term trend, that's a powerful market. That's a locked-in market. All right, but when the trend momentum changes, though, all right, you got to wait for that to settle down, because any buying that you do is going to be short-term lived. Any upward movement, any little one-day rallies, they're not going to last. They're not going to be sustained because of the bearish trend momentum reading. That the bearish trend momentum reading is telling all the traders and all the hedge funds and people out there to sell rallies. All right, until this changes. Now, you would have thought that the Dow's trend momentum reading would have changed because of the aggressive rally we had on Friday. But you can't fool the algo charts. The algo charts pick up on everything. And remember, we did this last year. Remember when that CPI data came out and the Dow rallied 800 points in one day? But what happened right after that? The market fell apart. So you're seeing a similar situation trying to develop here in gold. All right, gold has really historically had a hard time with 1900. And so far, it's been over 1900 for a minute now. It's been over it, but it hasn't gone anywhere. It's just staying there. You see what I'm saying? So it's going to have to really show improve and break out and stay above this Kumo cloud and turn this bearish trend momentum reading bullish. Until that happens, this market's going to be stuck in the mud. The trend momentum reading is what moves the markets. Momentum leads price. Price does not lead momentum. Momentum leads price. So until the momentum changes, the bull market is going to be stuck. And if it goes on for too long, your trends are going to start changing. You start having algo shifts like you had back here. See, this was an algo shift. All right, you went from bear market to bull market. That's a major algo shift. Algo shifts is a change in trend. All right, there's a change in trend. All right, you can also have algo shifts that give you a change in the trend momentum, like from green to red, but also from the trend itself, bear market to bull market. Okay, that's very, very, very important. See, the intermediate trend went bullish before the long-term trend changed officially to bull market. See why momentum leads price? The momentum said you have changed from a bear market to an actual bull market, a real full-blown bull market. And it did it way before the longer term trend actually confirmed that. All right. So this is what you look for. This is what you watch for. When you see a trend momentum reading change like that, it's normally a sign or a signal that the trend, the intermediate and or longer term trend could be in trouble. All right. And these moves happen during tops and bottoms in the market. So you have to respect it. All right. Once this turns back bullish again, then gold can be full blown like silver and just lock, just explode. Because silver right now is locked, but both markets are in their Kumo clouds, which means you're not going anywhere until you come out of that cloud, either to the downside or the upside. All right, moving on. Next up, we have the S&P 500. Now, the S&P 500 had a major algo shift just days ago. All right, you went from a bear market to a long-term bull market. You just crossed over. All right, market crossed over, and we're hitting a new weekly high in the process. So your long-term trend just turned bullish. Your intermediate trend has also turned bullish, and you got a bullish trend momentum reading. So like silver, the S&P 500 has just gone full bore, and there's nothing in the way, standing in its way. It's wide open to the top side. Taking a look at crude oil. Now, crude oil is a long-term bull market. Intermediate term, though, it's in a bear market, and you've had a bearish trend momentum reading. And now you just went neutralized. All right. Thursday and Friday was neutralized market. It should be noted that, though, on Thursday you had a rally alert and you got upside production on Friday. So chances are I'll probably try to test the bottom of the Kumo cloud before falling back down again. So you went neutralized. All right. Then the market shifted, came off, neutralized. You got a crash alert. The market did give you downside production. Then it went neutralized again. All right. So you gotta respect it when you see it. So that's where you are right now to start off Sunday night into Monday in the oil. You're neutralized. Taking a look at the Russell. Now the Russell is in a long-term bear market, intermediate term bear market, but with a bullish trend momentum reading. And you have a rally alert in your Russell now for Sunday night into Monday. It should be noted here that the Russell had two component issues. The first component issue was 1800 was the initial resistance. All right, your first line of resistance. Your second resistance is at 1850. All right, notice where the market stopped short. It stopped short at the top of the Kumo cloud, just short, just shy of 1850. All right, the futures went to 1836 even, and that's where you stopped. It just stopped right short of that 1850. So round two, Sunday night into Monday, can the market get a continuation? Can it bust through this 1850 secondary resistance? You already succeeded with 1800. Now you gotta close above the 1850, get out of this Kumo cloud, and then the Russell will be wide open to run back up to the 2000 resistance. Okay, so that's where you are right now. So this one is trying to turn the tide. Your momentum reading is bullish, all right? But your intermediate and long-term trends are bearish, which means the market is trying to put together a bear market rally that can become strong enough to change your intermediate and long-term trends to bullish. It has a long way to go. It's been the weakest of all the indices. It really needs to do something here. It needs to show that it has what it takes and there's enough power behind the one-day rally. All right. So that's what we're looking at on the Russell. As far as the dollar index, I told you once, I told you twice, this is what you got. You got a long-term bull market, intermediate term bear market with a bullish trend momentum reading. There's what do you do? What do you do with that? Well, here's the situation. The market's trying to get together a bear market rally. Unlike the Russell, it's above the Kumo cloud now. It managed to get above the Kumo cloud, consecutive closes above it. Now it needs to get above this 105 resistance. If it can get above the 105 resistance and get consecutive closes, then it can make that run, like I told you, to like that 108, 109, 110 level. And then from there, it's wide open until you get to 115. So it has a long way to go to show improve. The last time it was above the Kumo cloud, it couldn't sustain, and the market sold off heavy. So this one has a way to go to prove itself. All right, the last time you had intermediate term bullish was back here, and it couldn't hang on. The market turned bearish. Your intermediate bull market turned to a bear market. You had an algo shift here. The same time look, check it out. The same day you had a negative bot check, was when the intermediate trend was bullish and actually had a nice little mini rally from the previous day. And then the bot check came in immediately and you got that downward draft. Then the market turned on a dime and then had a little mini bear market rally and then collapsed. Why? Because you had a bearish trend momentum reading up here. And what did I tell you? When you have a bearish trend momentum reading, you're in the sell the rally mode. Okay. So that's what the market did. It proceeded to do that. All right. So can it do it this time? Or is it going to be more of the same? Technically speaking, you have been consolidated since last year, since December. You haven't gone anywhere. Now the market's going to try to give it a good old college try, right? So we'll see what happens. But to start the Sunday night into Monday, it looks like the market's going to try to build on the one-day rally. All right, so Ethereum futures, similar to Bitcoin, consolidating within a very wide trading range. All right, you got the 1950 to 1750 trading range. So $200 trading range in your Ethereum futures. Your long-term trend is bearish. Your intermediate trend is bullish, and your trend momentum reading is bullish. So the market is trying to maintain and sustain a bear market rally to turn it into a full-fledged bull market. So if the market can get up and going and get consecutive closes back above 2000 and do it and maintain that momentum, then it will turn this long-term trend back to bullish. And then they'll be locked and loaded, and then the sky's the limit. But for now, the market has topped out back here. You have a short-term top in place, and now the market's trying to get it going again to come up here and test the old high. But if it fails, the consequences could be quite dire, because then we could see this market literally crash below 1,000. So I know not what you want to hear, but we got to keep it real. I got to tell you what's what, and that is what's what. All right, so there you have it, folks. That is our cursory glance of the algo charts. That's what their algos are telling us to start the week off. That is what we're going to see, and we just have to be prepared for it. All right, you gotta be prepared. That's what we do. We prepare ourselves, and then we get in there and we do what we got to do. So now you have your marching order. So don't forget to continue to enjoy the rest of your weekend, and we'll see you back here on Monday. Be encouraged. Smash that like button. Remember, the system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Enjoy the rest of your weekend. I'm out. Peace.